Ethics. Why is it important in accounting and business? Well, I'll tell you. My name is Daniel Young. I'm doing this for my accounting class at Southern Utah University. Ethics in accounting and business are two sides to the same coin. They're important because they deal with legal issues, they deal with the consumer, they deal with stockholders, etc., and many other individuals can be affected by unethical decisions. Later, I'll go over and give some examples that many of you have heard of, but it's good to reiterate these examples and to learn from them. So why ethics? Ethics in a general sense is nothing new. Philosophers for ages have attempted to discover the right or wrong and so on. However, ethics in accounting is relatively new because of a growing economy or an economy in recession. Either way, the economy is growing into a global economy, and you have complex economies. It's just not as simple as it used to be. With increased laws and increased regulation, accountants have a responsibility to the company and to themselves and to each other accountants to be accountable to the decisions they make and how to account for things within the company. So this begs the question, is ethical behavior rational? Because as many classical economists, not just accountants, will suggest that people are rational. That's kind of the classical economist point of view. However, individuals aren't always rational, especially in business. Many businessmen will not always do what's necessarily in their best interest. And it's a debate that whether being ethical is in your best interest. Being unethical could get you a lot more money, which many individuals will think is in their best interest until comes time to it, they get caught, and then they're in jail. Well, then you can debate whether it's in your self-interest or not. A large part that I've learned is the difference between independent contractors and W-4 employees. See, these are the 1099 versus W-4 are important because I've seen companies where they can hire people as 1099 employees to avoid the payroll taxes. This is, I would say, is unethical. You should not do that. If they are actual employees, then treat them as employees and such and pay the correct taxes. But necessarily is it illegal if you're, who's to say that person is a W-4 or a 1099 and how to pay them? So there's different issues within that I won't necessarily get over with today. So next we have basically the legality of the issues, the ethics, and the morals. Right? They all three come from separate points of view, so to say. The legality comes from, the laws, right? The laws that the government provides, the regulations, and what's necessary there. Many individuals will tell you that we have too much regulation, which I may agree with. However, we do need regulation. There is a necessity there that without the regulation, then it's a free-for-all for ethics in business. And without ethics, the economy can go haywire. For example, Freddie Mac and Fannie Mae, the mortgage government-backed companies, they caused a lot of mishap. And even with the regulation there, they still messed it up. So something to think about there, which we'll go over that example in a little bit later. So I guess it brings up the point, is something that's ethical, can it still be legal? Or is something that legal still be unethical? So, I mean, there's and vice versa. There's a lot of variable information there that you can't say one way or the other for every single situation. We have to treat each situation differently. within business. Let's see. So, behavior, right? The consumer, the individual, everything drives from individual behavior and how we act in groups, but even that drives from individual behavior. The behavior of stockholders can influence a business decision. It's unethical to necessarily do some accounting practices that increase the stock more than it actually should be. So there's variables there that can matter. So a few examples. Obviously, we all know about the generally accepted accounting principles, right? These are important because it's or GAAP. They're the set of rules and regulations that guide what accountants should or shouldn't do within the United States. There are other accounting principles within other countries. However, these are what guide the United States, since that's where we're at. There are many ways to bend these rules, right? These are more of guidelines, as it says, generally accepted accounting principles. They are not laws of accounting principles. They are generally accepted. And being generally accepted, that means you can decide not to accept them if you don't want to, but you most likely should. So, a few examples. Again, we all know of the Freddie Mac versus Fannie Mae, sorry. Everyone's heard of these. $5 billion in misstated earnings were shown after an SEC investigation. Things get messy when you mess with these government-backed mortgage companies, and even with all the regulation, again, they caused a lot of problems in the 2008 housing crisis. Another example is Enron in 2001. It's a Houston-based company that caused their books to look much better than they actually were. Shareholders lost approximately $74 billion during this scandal, along with employees losing their jobs. And this is a great example of how everyone can be affected by an unethical and illegal decision. And we should, think of others, right? When we try to make these decisions. Waste management scandal of 1998 for in Houston. Again, it's a publicly traded company located in Houston, Texas. They allegedly increased depreciation, the length of time that it was depreciated for their plant and equipment, which this made them get the tax benefits and for a much longer period of time, which is not good. So, and this was a 457 million class action lawsuit was filed and won by the shareholders over this issue. So shareholders can get what they need back, but you don't want to mess with shareholders. They don't like it. So it's better to just be ethical and make the right decisions in the first place. So, again, there's many different points of view when it comes to ethics and ethical dilemmas. However, an important thing to get across is that in the educational system, a lot of accounting business schools are teaching ethics as a separate class, so it does not get missed, right? We want to not simply just briefly go over it in one class, but be able to talk about it. And, well, ethical accountants, that's where it starts, is their education at the beginning. So laws play a large part in this. But basically the question is, where do we draw the line? Where do we draw the line between what's ethical and not ethical? Or what's legal and ethical and moral? Right? So, we need to look at ourselves. Although it may be completely legal, it may not be ethical. Or if it's illegal, it may still be ethical to do it, but it's illegal, so don't do it anyway. But I appreciate you listening to this, and thank you.